All right, today we're diving into the Bank of India Banking and Financial Services Fund. Now, this is all about tapping into a sector that's really seen as the engine of India's entire economy. We're going to break down exactly how this fund plans to harness that incredible power.
So let's start with a really big question. How do you actually put your money to work in the very engine that drives a nation's growth? It's a huge concept, right? And the answer, as you'll see, is right at the heart of the financial system. To really grasp the opportunity here, we've got to zoom out and look at the big picture. And for India, that picture is all about a massive, ambitious economic goal. $5 trillion. Let that sink in. This isn't just some number on a spreadsheet. It's the official vision for the Indian economy. And hitting a target that huge is going to require a colossal amount of financial fuel. I mean, think about it. You can't just build massive new highways, expand factories, or grow a digital economy out of thin air. It all needs funding. And that's where the financial system comes in. It's the network that channels all that capital to exactly where it needs to go.
And that brings us straight to the BFSI sector. That's banking, financial services, and insurance. If the economy is the body, then BFSI is the circulatory system, pumping lifeblood, capital, to every single part to keep it growing and thriving.
Now take a look at this. This chart shows you just how incredible the growth in bank credit has been. You can see how dramatically it's expanded over the last decade, and what's really happening here is that this explosion in lending is moving almost in lockstep with India's overall economic growth.
So the key takeaway, and it's a really crucial point, is this. These two things are tied at the hip. One doesn't really grow without the other. As the economy gets bigger, the demand for credit to pour fuel on that fire just goes up and up. It's a really powerful, symbiotic relationship.
So naturally, when you have a sector that's so vital to the economy, it also makes for a pretty compelling investment story. Let's dig into the numbers and see how it's actually performed.
Okay, get ready for this number because it's a big one. Over the last 20 years, the Financial Services Index has delivered something in the ballpark of 28 times returns. I mean, that is a staggering figure. It really speaks to the kind of long-term wealth that's been created here. And this chart just puts that 20x into perfect perspective. See that green line? That's the Nifty Financial Services Index. Just look at how it's consistently pulled away from the broader market, like the Nifty 50 and 500. This isn't a small difference. It's a clear, powerful history of outperformance over a very long time.
And hey, this isn't just some old story from the past. Even just looking at this year, the sector has beaten the wider market by almost 12%. And a lot of that recent strength is coming from huge trends like the massive shift to digital banking and, of course, that continued expansion of credit we talked about. Okay, so we've established it's a vital sector with a track record of really strong returns. So how does this fund specifically try to capture all of that opportunity? Let's get into their strategy.
It boils down to a pretty clear three-pronged approach. First up, they look for compounders. Think of these as the big, stable, established titans of the industry, the household names. Second, they target innovators. Now these are companies in high-growth areas, like insurance or asset management, which benefit directly as people's incomes rise. And third, they go for high-growth businesses. These are the exciting, often disruptive companies that are riding the wave of new trends, like fintech.
And speaking of the future, let's look at what's on the horizon. What are the key trends that suggest this growth story is actually far from over? First, just look at how many more people are participating in the markets. The total trading volume on the NSE has multiplied by about 5 times in just the last 10 years. That's a fundamental shift. And it's a very similar story if you look at mutual funds. The total amount of money being managed, the AUM, has grown roughly 6-fold over that same 10-year period. This tells you that there's a huge change happening in how people in India are saving and investing. But here's the real kicker. This slide highlights the massive runway ahead. Even with all that incredible growth, mutual fund assets in India are still only about 17% of the country's GDP. Now compare that to the global average, which is way up there at around 75%. That gap, that's not just a gap. That is a gigantic opportunity for future growth as India starts to catch up.
So what's going to close that gap? Well, the key drivers are pretty clear. You've got rising incomes, which means more people have money to save and invest. You have this broader trend of financialization, and of course the explosive growth of fintech, which is making it all easier and more accessible.
All right, now for probably the most important question of all. We've talked about the potential, but given that this is a fund focused on just one sector, who is it actually for? Okay, first things first, and we have to be absolutely crystal clear on this. The fund is officially classified as very high risk. What that means, in plain English, is that your investment could lose value. It's for investors who understand that risk and are comfortable with it from day one.
So because of that risk, this fund is really designed for a specific kind of investor. It's for someone with a high-risk appetite, for sure. Someone with a long-term view. We're talking 5 years minimum. And it's for those who really want to get focused, thematic exposure to India's growth story, specifically through its financial sector.
And this quote just sums up the whole philosophy perfectly. The idea here isn't about chasing quick gains. It's about seeing the financial sector as a multi-decadal opportunity, one that can act as a multiplier for the country's growth for years to come.
And of course, we always have to end with the standard but absolutely vital disclaimer. All mutual fund investments come with market risks. Please read all the scheme-related documents carefully before you even think about investing. And remember, this is just for informational purposes. It is not investment advice.
So we'll leave you with this final thought to chew on. As India continues its climb towards that $5 trillion goal and beyond, is it possible that its financial engine, the very sector fueling that entire journey, could turn out to be the single most powerful growth story of the next decade? It's definitely something to think about. Thanks for tuning in.